Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 15th of April. Starting off with the FTSE 100, which is almost back into the rising trend channel that we had there from the end of 2023, as if the tariff debacle never happened. 82.20, the level that we want to try and get above on an end-of-day close basis. Above that, we're looking for the 200-day line, 83.30. On the downside, hoping that we can stay above or the right side of 8100, which was basically the upper half of yesterday's trading range and below today's support. Also had a break of the RSI resistance line there around the low 40s, around 41, and that is a leading indicator on the upside and has proved to be so, as we guessed it might be yesterday. Moving on to the DAX, and here also green shoots, in this case breaking that resistance line there from back in March. Wasn't very well drawn, but we've still broken it, I suppose. And looking for the market here to get back up to the old March support there at 21, well, basically 22,000, the 50-day line there at 22,200. Ideally, we stay above the March resistance line and yesterday's support 20,700. The only thing missing is that the RSI is still below neutral 50. We haven't been above that since the big breakdown that we had last month. Moving along to the Dow, which I suppose needs all the help it can get given the way things have been messed up in the recent past. Here we're back up to our support line projection, 40,500. Want to see a proper end of day close above that to give us a chance of filling the gap up to 41,500 over the next couple of weeks. RSI still below neutral 50, and we haven't actually seen the RSI above neutral 50 since back in February. So RSI, great indicator there when it broke back below 50 on the 20th of February, that something was awry with this market. That was way up near 44,000 versus the low near 36,500. Moving on to Bitcoin, where one would assume that if the indices are looking better, this will look better too, and it is. We had an RSI 50 rebound, which and also a bounce above the floor of that rising trend channel from March last year at 83,000. That suggests we're back on track, really, in this breakdown that we had at the turn of the month or earlier this month. Just a bear trap. Above 83,000, looking for 90,000 sometime later this month. RSI at 54, which is right where we would like it to be in a situation like this. Moving on to gold, and here the picture that of a market which has, well, I suppose it's exceeded expectations in some ways. We were looking for 30, with the top of that rising trend channel, the red resistance line there. 32.20 by the end of this month, that's been exceeded, but we just need to see an end of day close now back above that line, 32.20, to give us 3,400, maybe by the end of next month. Bit of bearish divergence coming in there as well, so higher highs for this market, but lower RSI, so something to be wary of. If you are cautious, then you'd probably be waiting for a dip back down to the April resistance, initial April resistance around 31.60 as a dip to buy into. Can't resist looking at pound dollar, given that the last time we looked at it, we were in the run up to a golden cross, and now we're just a few days away, it would seem, from a golden cross. 50 and 200 day lines nearly approaching now. Initial target here after $1.30 up to $1.33.10, and after that, really not much to block the progress. I suppose there is the last year's 135, 134 plus peak, but really we're looking for, with the golden cross, we're looking for $1.40, perhaps as soon as the end of next month. That was the pandemic peak for this market. Upside valid while we're above the initial March resistance around $1.30. Moving along to the stocks and starting off with Alien Metals, which has bounced off a rising 50-day line, which is always encouraging. Also gapped up, so unfilled gap to the upside ahead of that bounce. And looking for 0.16 pence on this stock by the end of next month, while we remain above that 50-day line at 007. On to Ariana Resources, which must win the prize for having, I suppose, in the recent past, the worst PR in history, and also having underperformed gold so spectacularly as well. So massive divergence there. But we do actually have a decent technical signal here. We gapped down at the end of March and gapped up last week, giving us a bear trap island reversal. That can be a very strong signal. The proviso is that we need to stay above the latest gap there at 1.08. If we can do that, then we're looking at a target up to 1.75 pence at the top of that falling trend channel. Hopefully that could be seen by the end of next month, although at this stage it's difficult to work out what might trigger that, apart from the shares having been delivered a overshoot to the downside. On to Deltic, which tends to be a very difficult market indeed, and one always looks at it with trepidation, but at least we have had a unfilled gap to the upside through the rising 50-day line. That suggests that we're heading towards the 200-day line at 6.4 pence, hopefully by the end of this month or even sooner, while we're above recent resistance at 4.25 pence. On to Greatland, which seems to have a sort of permanent lap of honour in the markets. Here you can see that we're just holding this flag at the moment, but the above 13 pence, as stated before, we're looking for 17 pence, hopefully by the end of next month or even sooner than that, after the RSI 50 rebound and unfilled gap to the upside that we had last week. The other point to note is that actually this was a bear trap island reversal, so gapping down earlier this month and then gapping up, which is can be a very strong signal when it occurs at the highs. Another stock on a victory lap is Mkango, and here I widened the rising trend channel I think last week, and that was heading for 23 pence. We're looking for that now by the end of this month, while we remain above the latest gap there at 16 pence, and in fact not far off from upgrading that 23 pence target even further. On to Metals One, which has had a stellar run and managed to spike through to 30 pence. That looks as though it's a little bit overcooked, but at least while we're above the latest gap there at 22 pence, still looking for 40 pence perhaps by the end of next month. The situation of PR1 priority deserves a look at the moment as well, given the way that shares have received quite a battering in the recent past, but we are floating above the 50-day line there at 5.1 pence. If you look closely, it is actually starting to rise, and that's a sideways shuffle above a rising 50-day line. That suggests we could have another go at hitting the top of that falling trend channel at 9 pence, as we did last month. Obviously that didn't go very well, but 9 or even 10 pence could be the result if we can stay above the 50-day line on this occasion. RSI's bounced above neutral 50 as well, so let's see if that rather marginal set of signals will deliver upside for the shares. It would be something of a relief. Moving on to Scancell, and here you can see that we had our initial target here once we broke out of the falling wedge up to 12 pence. It actually looks as though the shares should be able to do more than that, given the way they're going. We're already at yesterday's high, so filling the gap up to 13.5 pence. Looks as though what's going to happen there while we're on the right side of 10 pence. Interviewed Thor Exploration, I think last week or the week before. I think the shares at that time were around 26, 27 pence. They're now up to 33 pence. So we've blown our previous target of 32 pence out of the water, above 32 pence. Looking for the next leg up, which should be as high as 47 pence by the end of next month. So stellar situation there for that company, and upside valid at least while we're above the previous gap there at 27 pence. Finishing off with a stock which is probably not for widows and orphans, and maybe not for anybody else either, but just the first hint that Uru Metals has bounced off the floor of its rising trend channel. We can get an end-of-day close above the 200-day line at 5 pence. We could be looking for a retest of the highs, although, as I said, this has been a horrible situation in terms of the volatility. Ideally, of course, we stay on the right side of 4 pence, whatever happens. That's it from me today. More updates tomorrow.